Hello dear students, welcome to Devika's Commerce and Management Academy. Holding companies, one more short problem we'll see. This problem is different from the first problem. In the first problem, we were not having goodwill or capital reserve. Now in this problem, we are going to get. How do you calculate that? That will focus. Problem is very simple. So it's given on the board. So from the following information, prepare consolidated balance sheet. Two companies are given, holding company and subsidiary company as liabilities and assets. Okay, so let's see each and every item. First one is fixed assets. Fixed assets, what do we do? Simply add and show it in the consolidated balance sheet. Okay, next investment. Investment, as I told you, we should not take it into the consolidated balance sheet. We don't take. Okay, now we have only one item here. Now coming to liability side, share capital 10 rupees each. Share capital in H Limited 8 lakh and subsidiary company limit S Limited it's 2 lakh. Subsidiary company share capital also we don't touch it. These two we consider while calculating goodwill or capital reserve. For that purpose we use these two, right? We don't directly take it into the consolidated balance sheet. Now what else is given? Reserves. Liability side you'll write capital and reserves. So there you are going to write. First you'll write share capital and capital and reserve. So reserves are given. In the balance sheet we can write. Now current liabilities, trade payable are given. Trade payable directly they have given. So we can add and show it in the current liabilities balance sheet, consolidated balance sheet. Now problem is very simple. So here we are going to calculate either goodwill or capital reserve. That is why I have given here calculation of goodwill or capital reserve. Shall we do first working notes? Okay. Now for this, cost of investment. How much is the investment? Investment is 2,20,000. That will write for calculation of goodwill or capital reserve. We'll take cost of investment. What is the investment? What is the investment? What is the amount? 2,20,000. Minus paid up capital, share capital. How much paid? 2,20,000. Investment is ours is this much. What is the capital amount? Means that is you can say it as a paid up share capital of S Limited. Their capital is here 2 lakh. Their capital is 2 lakh. We are paying 2,20,000. Our investment is 2,20,000. Why we are paying extra? How much is the extra? Extra is here 20,000 difference. Capital is 2 lakh, but we are paying 2,20,000. Extra 20,000 we are paying. That 20,000 why we are paying means because of goodwill of that company. So whenever our investment is more than the capital amount, investment is more, capital is less, this difference we say it as a goodwill. Goodwill we are going to show it in the consolidated balance sheet under the assets column, intangible assets. Okay, if suppose this is 1,80,000 and this is 2 lakh as it is, or otherwise 1,50,000 let us take. This is 1,50,000. Our investment is 1,50,000. Actual shares are 2 lakh. 2 lakh shares, but we are paying only 1,50,000. The difference we would have said as a capital reserve. Okay, when we are paying less than the shares, like 1,50,000 we are paying, whereas the shares value is 20,000. In such case, the difference will be 50,000. This we say it as a capital reserve. This one. Are you getting? With this problem, you should have a good understanding. Now, in this problem, as per this, our investment is 2,20,000, which is more than the share capital. Goodwill, you got it. This we are going to consider. Now, you can start the problem. already kept the heading consolidated balance sheet of H Limited and S Limited, equity and liabilities. Under this, first shareholders fund, two are there. One is share capital, reserves and surplus, isn't it? So first share capital will write. Share capital, we are going to take only this one, holding companies 8 lakh. Each share is 10 rupees, which it means how many shares are there? 8 lakh divided by 10 comes to 80,000. Okay, 80,000 shares at the rate of 10. You can say 80,000 shares at the rate of 10 rupees each, which is 88 lakh. We have reserves also, reserves and surplus will show, right? Under the shareholders funds, reserves and surplus. Simply the said reserves will take the reserves only, that is 1 lakh. Apart from this, we have trade payable. Current liabilities simply add and show, as I said. Now we'll say current liabilities, trade payable, 1 lakh plus 1,50,000. Sorry, 1 lakh plus 50 means 1,50,000. Anything else? That's all. So total, if you see 10,50,000 we are getting. This is on the liability side total. Liability side is over. Now let's focus on the asset side. Assets will take non-current assets and current assets. Non-current assets, under this tangible assets, intangible assets. Tangible asset means fixed assets here. So fixed assets, this is 7,80,000 plus 2,50,000. We'll add and we'll show it. 7,80,000 plus 2,50,000. How much it comes? 10,30,000 it comes. If you total up, we are getting 10,30,000. Fixed assets are over. Next, investments we don't write. Okay, tangible assets we know. There is intangible asset, goodwill. We'll show that. Intangible asset. Goodwill is how much you got in the working notes. You can say it as the working notes. Under the working notes, 20,000. Always remember, you have to show the working notes. Wherever you are doing anything, calculations like this, specifically you have to mention it. Heading, calculation of working notes, calculation of capital reserve or goodwill, whatever you are going to get. So here we got goodwill. Goodwill I am writing here. So this total, if you see, 10,50,000. Both the sides it got tallied. Simple problem. But in this problem, you need to focus on the investment and share capital of the company. Okay, subsidiary, second company. So that is holding company and subsidiary company. Clear? Screenshot. In the coming classes, we'll see more problems. Prepare well, check out the playlist and practice well. Don't forget to share these videos. Good luck.